investors. This is Joel L. Conan with Thursday's edition of Pre-Market Info.
And I'm Dennis Dick with Pre-Market Info. And Brent, Jake, you guys there as well?
Yes, sir. Good morning, guys.
Hey, morning, Dennis.
Morning. How's it going?
Benzinga news desk is everyone's pretty bundled, I think, right now. I actually have my jacket on still.
Is it cold in there?
It's a little cold here.
It's getting chilly up here in Michigan, not gonna lie.
I just got to kick that furnace on, get that furnace going. It's kind of cold in the tech sector here today, too. We got a tech wreck on our hands.
Tech wreck.
Tech wreck. Cisco, all of a sudden, disappointing again. Joel, wasn't it like 3-4 quarters last year or a year and a half ago that they lost, or that they disappointed earnings in a row and the stock would gap down $2 or $3? Remember that?
It might have been a little bit. Let's see if I could go to the weekly here. The weekly is going to be kind of hard to show it because it's going to show patterns monthly. There was one point, maybe going back. I guess it was this pattern here in like 2011, 2012. So hopefully they're not starting a similar pattern
trend
now. But what was the report? What did they actually say?
Well, Brent, you got the report in front of you there?
Yeah.
53 cents versus 51, so they did beat, but the revenue was light. But then comments and when they started the conference call, the stock really started getting killed. It's trading down 21.30 right now.
Yeah,
the stock is down enormous. What's the report say?
If you look at the after-hours chart, you can really see where the report came out, and then you can see where the guidance started coming out of the call. Cisco normally does release their guidance on the call. On last night's call, I said Q2 EPS expected in the range of 45 to 47 cents, and analysts are currently up around 52 cents. They also said they're expecting Q2 sales to be down in the range of 8 to 10%. And there she goes, trading around 21.28 right now.
Down a cool 11% here. So actually, I believe they disappointed last report as well. The stock, I can see the gap in the chart back in August from $26 all the way down to $24.28. Well, this disappointment is massive here because the stock is losing 11% today, and the entire tech sector is down in sympathy here. We're seeing stocks like IBM trade down a couple of dollars here in the pre-market. You're seeing stocks even like Oracle down 60 cents. Hewlett Packard down 60 cents. So this is hitting all the tech stocks across the board, which is what it was doing back in 2011 when they kept missing too. It kept knocking down the entire tech sector, and I'm having deja vu from those days.
Deja vu all over again. Let's just take a quick look here. You are finding a little bit of support here in the pre-market over the last 45 minutes, hour or so here. Been making lows right above the $21 level. Since making that lows, we're bumping our head up against 21.50. So if you're trading here in the pre-market, we've identified one support and one resistance level for you. Looking at the day, the daily's not going to do much for you. You got to go to the weekly chart. Slice through that major support at the $22 level. So if in fact we come roaring back up, that will act as another resistance point. And that $21 level, if you go back to May of this year, you had a low at 21.05. So you are finding, according to the charts here in the pre-market, you are finding pretty good support here at the $21 level. I think even if it does cascade through that area, I think you'll still see some good bidders under the $21 level because you had a couple, I don't know. I just think it's overdone. But what do you think, Dennis?
I don't know. It's something that I remember 2011. They'd go down and just continue to drift lower. I think you got a good level. I mean, Cisco coming out here, huge company. For it to lose $2.69, I don't think it's going to fall like another dollar or anything like that. So I kind of like the 21.05 number that you gave, but I would have thought I maybe would have found some support at 22, and that didn't work. So it's cascaded through all those levels here. So I guess you got to wait till it stops falling before you start picking bottoms here. But what was the pre-market low there, Joel?
21.05.
Oh, so the pre-market low is 21.05, and it coincides with that low we had back in May at 21.05. So that's a pretty decent number, maybe for starters. Starts getting through 21 though, and it's not good again. So, but I'm looking at the loser board here, and it is littered with tech stocks just because of Cisco. Let's go to IBM here. Big 10 down $2 here on these Cisco earnings. It's trading at 181.75. Actually, IBM had a pretty decent day yesterday. Had popped up actually 2 days in a row, but it's giving back a lot of those gains here this morning.
Yeah, I haven't taken a look at Beamer here. Just has been climbing off the 172 and 50 level over the last few days. Had a nice rally. Now giving back a couple bucks of it on the Cisco earnings. Boy, this is a tough one here. I would say you really don't have major support until you get down to yesterday's low, which was 180.04. Besides that. Excuse me, yesterday's low was, yeah. 2 days ago on Monday you had a low at 180.04. So if you're waiting to get this on a pullback here, that's really the first major support level I see. And then below that you start to get into the 170 handle, but it's good if it goes to 170 because Warren Buffett loves it, and if it goes to 170 he's going to buy even more. So that's your interpretation of that.
It is cheap, obviously IBM we've been talking about it throughout the year, and it's been one of your big underperformers here because it topped out back in April over I believe got up to like 215, and obviously it's just been treading down despite the market making new highs. IBM really hasn't participated. It's had a decent month when we bottomed back down here at 172 after the reported earnings. It's climbed back and basically got back all of those losses that it had from that report. Now, though, drifting back down on these Hewlett-Packard earnings, I think it needs to hold the 180 handle for the bulls to keep some control in this one. And I said Hewlett-Packard, I meant Cisco.
A little Freudian slip there, Dennis.
Yeah, and I was coming to Hewlett-Packard next there because they are taking some major heat here, too, from the Cisco earnings. 26.49 is where it closed. It's trading at 25.90 right now here in the pre-market. So they're taking Hewlett-Packard and beating that one up, too.
Right, and Joe, did you have some other news on Hewlett-Packard?
Yeah, that's right. Yesterday, Hewlett-Packard announced that they were pulling their Chromebook 11 from store shelves and online retailers due to an overheating issue. So it's no longer available on Amazon, Best Buy, Hewlett-Packard or HP.com, and several other places.
They had problems with that before, too. I actually remember one of our traders saying, and I'm not sure this is just his story, but he was saying he left his laptop plugged in there, and actually it was smoking a little bit, the battery, just from being plugged in. And I know those old Hewlett-Packard laptops, when you used to plug them in, that battery would get really hot. So
full disclosure here, though, Dennis, I have the Samsung Chromebook, no issues.
So maybe the Samsung. I'm not saying your Hewlett-Packard laptop's going to burn down your house here or anything, but they get hot, those batteries. So I don't know if that's what the issue there was or not, but wow, it's concerning. Hewlett-Packard 25.90 right now. What are the technicals saying, Joel?
25.70 low. You hit that after the initial Cisco news hit the tape. Got a rebound to the $26 level. So those are a couple early parameters where the stock has been trading at. Looking at the daily chart here, it's had a nice run up. You did have nice support in the $26 area. Two lows, last two trading sessions, 05 and 16. So there's going to be your resistance now. If it can get back in above 26 and hold it, I think they may be able to shrug off this news. Below the 26 handle, you can just look at the dailies here. You could get back a lot of that run that it had. Minor support at 25.5, but then you could easily slip down to the $25 level.
Here's an interesting one: is Oracle closed at the high yesterday, $35, and that's the highest that stock has been since the beginning of the year. 35, I actually see 480,000 shares up there at 35, so there's a big institution trying to dump stock there too, and I still see him in the buck, but I don't think it's going to come into play today because we are significantly down on Oracle this morning, trading at 34.40 right now, and obviously down off those Cisco earnings as well.
Looking at it, you did get a spike down immediately off the Cisco news, down to 34.40. Then you just kind of been hanging there. 34.40. Is it bid there, offered there in the pre-market?
It's offered there, a bit at 34.35 though, so it's traded quite a bit of stock here, 7,000 share, well, almost all at 34.40. So it looks like they've got this one priced where they want to price it. So it hasn't moved too much. It's kind of sitting there trading at 34.40.
Yeah, I just below that. You did have a double bottom at 34.27 and 34.28. Those are going back. On Monday and Tuesday, so it is open a little bit of support. If in fact you do get through that 34.27 level, things open up to the downside.
Let's fly through some of these other tech stocks here. I'll just give you the numbers. You've got Jabil Circuit trading down here at 2029 from 2067, so down about 1.5%. You got EMC trading down about 1%. You got Sienna, CIEN, trading down 2.5%. Juniper trading down 50 cents here. So like I said, the loser board is littered with tech stocks right now, and they're all going to open weaker. It is tech wreck here on Benzinga's morning show here this morning. But it's not only tech wreck there, Brent. We've also got Walmart trading down and Kohl's. So you got a little bit of retailer wreck a little bit too here. Start with Walmart. They just reported earnings here this morning, $1.14 versus $1.13. Missed on revenue though, 115.69 billion versus 116.75 billion. So missed by, holy cow, that's so much money they bring in a quarter. When you look at $115 billion they bring in revenue in the quarter, that's absolutely incredible. But regardless, they wanted them to have 116 billion, so it wasn't quite enough, and the stock is trading down $1.20 here this morning.
Guidance definitely didn't help. Q4 EPS in the range of 150 to 160. Analysts are at 169, and they also narrowed the fiscal year 13 to a range of 511 to 521. Analysts are around 520 right now.
Guys not helping either.
Yeah, initials. Well, Dennis, why the S&P's up? All you're doing is you're giving good news or bad news, bad news, bad news. The S&P's are up 3.25. What's going on?
Because the Fed. It's always the Fed. That's the only reason we go up. Yellen came out after the bell, said the economy must improve before the Fed lessens stimulus. So regardless of whatever happens, and that's what we've always said, the Fed's got this market. It keeps getting pushed higher, and you got Yellen's comments afterwards. Keep trying to push the futures higher despite all this bad news. So like we've said, it seems like the market wins no matter what. If the economy starts to improve, well, that's good for the market. But if the economy doesn't improve, we're going to continue to have Fed stimulus. So how do you fight that tape? How do you fight the Fed? And that's what you have to do here. And they're not even willing to fight the Fed here this morning, even despite all these bad earnings we're talking about.
77.50 was the initial spike down in shares of Walmart. Need to get a bounce if you want to short it into a little bit of strength here. 78.25 and 78.35 were your lows from Tuesday and Wednesday. That now will act as resistance. Coming below that 77.50, I want to alert our traders to another potential support level. In Walmart, shares did have a double bottom at 77.24 and 77.30 on November 6th and 7th. So a couple other support areas here. I don't know if I'm really gonna see if this thing's just gonna tank and go keep going down. It kind of feels like it's just kind of gonna make that pre-market low and maybe drift back into the 78 handle.
Kohl's, they were leaning the wrong way on this one, Jill. Off the Macy's numbers yesterday, Kohl's opened higher, spiked up, actually made a new high on the move up to $59 even, but it's down significantly here off their report. 81 cents versus 86, so they missed. 4.44 billion versus 4.55 billion. Miss on the top, miss on the bottom. Lowering full-year guidance to 408 to 423. Analyst estimates were up at 422, and the stock is down almost $6 here today, actually about $5.30 on 700,000 shares. So big volume, big down move.
Kohl's taking it on the chin here.
Kind of
have an the kisser for sure there. Kind of an interesting pre-market pattern here. Kind of sound like a broken record here.
The fall off the cliff pattern.
Well, but look at this. It fell off the cliff here, but now it is. I mean, there's no doubt that since the reopen here at 4 o'clock this morning, someone's buying the stock here, supporting it at the 52.55 to 52.60 level. The low in the last bracket moved up to 52.80, so major support there. I mean, probably a better area to cover a short than initiate a long.
Yeah.
But going longer term, I mean, this is a huge drop. I mean, 10% drop. I don't know if their earnings were that bad, but if you get through this 52.50 level, nothing really on the weeklies to support that. If it's going to just keep on going here, I don't know. What are you going to say? $50? I mean,
I think so. I think long term, I don't think it sees it today, but I think it may drift eventually to $50. I think if you're picking a bottom of 52.81, I think you might get a shot a little bit lower here. But I remember you were telling me that on JP Morgan too, and I never got my shot to pick it lower. I always have to bring it up.
To JP. But what about, and I just want to get your opinion on this one, Dennis. J.C. Penney. Did they already report? I'm not sure, Brent, but this chart's looking a little bit interesting to me. I want to get your opinion on it, Dennis. Basically,
I was looking at it yesterday. So before you give your thoughts, I'll just say I was looking at this yesterday, and it has had some nice consolidation here, and you got this kind of little almost cup and handle thing happening here too. So maybe they're starting to actually get, like we said before, the dog started barking there a little while ago. I don't know. I don't actually mind this chart. I hate the company. I hate the fundamentals. I hate, when I go into the stores and there's nobody in there, it's like a ghost town. But from a technical perspective, I actually don't mind it right now.
Right, and you've had three highs between 873 and 877. Okay, so basically a triple top there, and then you go back to trading on November 4th. You now had another high at 871. Now, when you see these kind of patterns, obviously, if it started the day at 830. Well, I know the market opens at 9:30. I'm using 8:30 as a example in price, but it would have 40 cents to run to get to that level. Now you had the close at 867. Only got 10 cents to go. This thing's probably averaging a 40, 50 cent, average range.
Running start.
Yeah, so I'm kind of, what I would do is I would use it, as a minor resistance point, but I think it breaks above there. I mean, you could get all the way to $9, but and also another thing that I'd like to alert our traders to on, the way this has been trading here on the daily. You had this little bump up here. 3-4 days, and then you sat for 3 days. Then you had another nice little move up, and then you sat consolidated for a few days, and then boom. So here's the same pattern. So kind of leading to, I hate to say it, and I think Brian Sazi would probably slap me across the face, but kind of leaning towards the long side a little bit here in J.C. Penney.
The problem is we're both leaning to the long side, so can we both be right? Good. And I'll tell you, I can give you the case for the short here too. They are littered with institutional orders in the 870. So somebody, it's all that topping out at 873, 875, 877 the last few days. It's actually backed up by institutional size. I see 20,000 selling 875. I see 45,000 selling 877. I see 35,000 selling at 880. I see 36,000 selling at 881. All from the New York Bucks. So it is littered with institutional size there. Somebody wants out of a piece in the 870 to 880 area. If we can chew through that guy and start trading like through 885, then maybe we can start making a run for that $9 area. But until we chew through all that stuff, I think maybe I'm going to hold off on the
Joel, just to follow up, I do see that JCPenney will be reporting on the 20th, November 20th. That will be Q3 results.
Oh, there you go. So it's coming up there 5-6 days.
Next Wednesday.
Maybe get a pre-earnings run or a pre-earnings sell-off. Nobody ever wants to know that thing going into earnings. So Dillard's reported here too. They're sticking with the retailer theme. They have not really traded much since the report. Actually, they've traded zero since the report. But they beat $1.13 versus $1.05, $1.51 billion versus $1.50 billion, and the stock is bid at $90 right now. Best offer is up at $93. So this stock's looking to make new highs.
And it's been on a run lately. So you said there's no trading. Wow, look at that day yesterday that it had.
Somebody's leaning the right way here.
Wow, off the Macy's numbers here. Not much going into pre-market. I think this is probably an all-time high for this stock. No, actually, I can find some resistance here. Going on to weeklies, Dillard's did spike up to what's the trading in the pre-market, Dennis? Did you say
Zero trades, bid at 90, offered at 93, so very wide spread.
Wow.
So nobody's willing to really, but they're just willing to bet that it's opening higher. Somebody's bidding for 600 shares at 90. So we don't know how high yet, though.
92.68. That was the high that you had back in early June, and then above that you open up to the all-time high at 94.56 to 86. So couple gappy levels here. This is not a heavily traded issue here, so be careful here in this one.
I always had this preferred stock. This is what I got in my portfolio. DDT is the symbol on that. It yields like 7.5% down here, the DDT. So if you like, stocks that yield, it's actually, if you want a little preferred stock, this is callable. It was callable back in 2008. It's callable at $25. So they can call this in anytime here at $25. But I've been riding this thing for the last 4 years here, and they have not called the stock and just keep sitting there paying me. I think it's 7.5. So they just keep paying me my 7.5%. I figure, well, I don't really have much risk of anything bad happening. The stock's at all-time highs. The worst that can happen is they probably call in the stock, and it gets called away from me for $25. So I'm kind of risking 15 cents to continue to grab those dividends. So if you like conservative preferred stocks, that's one that I've got in my portfolio, and I don't know if that's, but I think the 25 is pretty decently defended there on this one.
Oh, for sure.
So just sometimes our investors like some different types of investments. And when I see a stock making new highs, I'm not that concerned to buy their preferreds, especially when they yield over 7%. Viacom also reporting earnings, VIAB, and it is trading up $1.55 versus $1.45, $3.65 billion versus $3.6 billion. So it's not all bad news here today, Joel. We got in the media company Viacom actually trading up. That's getting close to all-time highs for Viacom too.
Yeah, we are trading up in the pre-market here. We've made a pre-market high at 85.78. Not a ton of volume here trading in the pre-market. Let's give you a quick snapshot here. You got that print at 85.78. Traders or investors in this stock have to be keeping an eye on this $86 level. Probably an all-time high for the Class B shares of Viacom at 86.06. We're only 30 cents away from there, so that's the only number you have to look on here for shares of Viacom B. And then if you look at this monthly pattern here, pretty juicy here with all these tops here at 85 and 86, so on the verge of a major breakout here for shares of Viacom.
I used to trade this back in 2003, 2004. I did the share class arbitrage there between VIAB and VIA. I did that almost exclusively. And they trade the difference between the two is the VIA has the voting rights and the VIAB doesn't, and that's pretty much it. So they always trade very, very close together. But I can remember back in the day, I'd sometimes, you just be going in there trying to make 10 cents, and you put the one on and short the other one. And actually, my whole year I made it just trading that thing. Can't really do that stuff too much because the high frequency traders have monopolized that now. So they're so much more efficient at it that you just can't seem to get the good fills on the VIA as you could before, because they'll be there to defend that and block you from trading it. So they're more efficient at it now, but it brings me back to the days when I used to be able to do that kind of stuff.
Long before the sub pennies.
Long before sub pennies, long before high frequency trading dominated this market. We've been moved from being scalpers, and that was a pure scalping strategy, to more day traders, swing traders, because it's so hard to scalp and compete with the high frequency traders. That's why we always say on the show, you got to lengthen your time horizon a little bit, which is what we have done in order to basically not be competing against the high frequency traders.
And you mentioned that we're going to have Serge Berger on as a guest today, and he is that's exactly his strategy. A little bit longer term swing trading, not being on the edge of your seat. So I'd like our listeners to stay on and listen to Serge and get his take on these markets.
Riverbed Technologies. What happened with this thing? Brent, is it you or Jake, did either of you guys have the report on this Riverbed? Because after hours, it spiked up, or actually during the day, I believe it spiked up, but now it's selling off here. What's happened over there at Riverbed?
Yeah, the spike was like 10 minutes before the close last night, there was a Bloomberg headline saying, oh, my Java crashed, that's a problem. Bloomberg headline saying that the company had hired Goldman to consider a possible sale. Shares jumped, closed right at 1904, kind of selling off this morning. There was a Reuters report late last night saying that is not true. So you can see that the stock is down, trading around, what, $18 right now?
Yeah, so basically you spiked all the way up, it looks like, to 1938 on that report with a few minutes to go. Traded up after hours, and then obviously when that Reuters report broke that said they're not considering a sale, it's pretty much given back all those gains immediately, trading back down to 1804. I guess still got a little bit of the gains. It was trading around 1740, so it's got about 65 cents a gain still sitting in there.
Right, you did see that spike up, and now you've come crashing down here after that report negated the Goldman Sachs help out here on the sale. Got down to 1780. Look at that as support here. We are trading 20 cents away from that. If you just kind of, stock had a nice run up going into that, so maybe the memo got out that the league was going to happen, because this thing gapped up about 4 sessions ago from 1550 to 16, and then had that blow off yesterday. Besides that 1780 pre-market low, really not much support down to 1733, and that was yesterday's low.
Hey, I got some breaking data for you guys.
Okay, we're
We
excited.
have initial jobless claims for the week ended November 9th coming in at 339,000. Economists were looking for 330,000. Continuing claims for the week ended November 2nd also just out, 2.874 million. Economists were looking for around 2.87 million. Looking at the last week's revisions, they were slightly higher. Also just had a preliminary Q3 reading for non-farm productivity. That's coming in up 1.9%. Economists were looking for a gain of 2.2% there. What's the market doing?
Zippo, zilch, nada. We're trading up. Well, maybe we got a half a point spike on that. Joel, we're up 3.5 here.
No data, no movement into data. I mean, we didn't start out the show with our usual S&P rant. We did get up to 85.25 in your pre-market. That's the only number you have between 1785. Next resistance at 1800, and then above 1800 is 2000.
Good numbers there, Joel.
Okay.
Wake me up before you. That go stock, it does not stop going, man. We should have known from the ticker symbol when this thing had good earnings, it was just going to continue to go. This is your classic gap and go. It had earnings 3 trading sessions ago, gapped up from 20 or from $18 up to like 21.63 or something that day, and just kept running and running and running. It closed at 24.85 that day. The next day, goes up, trades up 25.87. Then yesterday, pops to 28.50. It does not stop. If you are short this thing, you are dead in the water. It's now at 30.47, up another $2.17. Go keeps going.
Do we get an upgrade today or something?
I don't even. Do we have something on Go? I was looking. I didn't see much on Go here. It just keeps going though.
30.95 pre-market high. We backed off 50 cents from that level. This is a new issue here, so you're in new ground. So keep an eye, pre-market high 30.95.
Tesla yesterday. Little bit of a drama. They said, oh, the plant's on fire, and then the stock started selling off. But what's the story there, Brent? Did you have the story on Tesla? There was some type of, it was an accident at the plant? Is that what it was?
Yeah, it was at a Tesla plant. Actually, I'm looking at the Twitter account that broke that news. It was a news assignment manager from KPIX5 in San Francisco saying that there is a Tesla plant that has some kind of ambulance, some kind of fire going on. I did call around to the Fremont Fire Department. That was the local fire department there. They confirmed that there was some kind of accident there. It ended up being an industrial accident, not necessarily a fire. So if you look at the chart, you see the plunge lower, hitting a low 136.34 yesterday, and then kind of a slow rise as traders sort of digested that.
And they're rallying here $1.10 here again, so they don't seem too concerned with it right now. I will highlight that 140 level. You know, I love my whole number theory, but we were consolidating there basically between 2 o'clock and 3 o'clock. So for an hour before that news broke, and that's where we were trading. So I gotta think we get back up there. Maybe a few people have positions on from that price and might be willing to take them off after that whole debacle.
I actually am looking at this a little different perspective than you are, Dennis. You've had this crazy drop. I'm not that 140 means nothing to me. Okay, but what means something to me is you got the spike low 132.32. Since you've made that low, you've had three lows basically within a buck: 136.18 to 137.10. It's building a base there. That's major support. If you go back to an area, like this, you had three highs in the same area, then you had a little bit of drop. I'm looking at Tesla here from the long side, holds that support. If trading here 130, well, it's trading at 140 here. I'm looking at support to hold, and then if this thing gets above 145, you're going to have shorts scrambling for cover here, because there is nothing above there. A little, came down on the earnings day, not much, and the rest of the 140 handle, 150 handle. So definitely a favorable technical pattern here for shares of Tesla.
Solar City. So goes, and Solar City keeps going here too. SCTY trading up significantly here in the pre-market. We've got Baird giving them an upgrade here. What else is in the headline? Solar City prices.
The company, they priced a $54.425 million offering of asset-backed notes. And, this doesn't seem too significant. I think traders are taking this as a sign that the company will not be doing a secondary offering in the near future. So I think that, you mix that with the upgrade from Baird, and I think you've got quite a catalyst to the upside. And keep in mind, with the Canadian solar beat earlier this week and the strength in solars in general, you're just kind of adding fuel to the fire here.
And it is firing higher. It's up 9% right now, up $4.82. So SCTY, bulls are back.
Trading right here at the pre-market high, 58.76. The stock had a couple days of consolidation after the big drop, and then busted out above the 55 area. Really not much between 55 and 60, as evidenced here by the pre-market trading activity. Looking at the $60 level just as kind of a psychological level. We're only $1.30 away from that. But if you want a number off, to determine, from the actual high, you had a high at 61.95 on November 6th. Let's see if any of the other solars are
Canadian Solar.
Yeah.
CSIQ up 74 cents here. Look at this chart of Canadian Solar. This thing has just been on an absolute tear. It was a $10 stock or $12 stock. Actually, $10.55 back in August, middle of August. So here's a quiet triple for you. The stock's tripled here in 1, 2, 3 months. So incredible move here. And actually, looking back on the charts, you go to the weeklies, this stock was a $2 stock just at the end of last year. So basically in 1 year here, we went from $2 to $32. Holy cow. That's
busting up here in the pre-market too, 32.75 high, just kind of sitting there. Dennis, don't you have some solar panels on one of your buildings?
Yeah, my dad's warehouse, we did a solar panel project on it. In Canada, they've got a program there where you can basically do solar, and you put them on there, and obviously your expense, but then you can sell the power back into the grid, and they give you a premium for doing that because they're trying to encourage clean energy over here. So when the program first came out, they were paying us 80 cents a kilowatt, so we got on right in the initial program, and actually, and he only charges you like 15 cents a kilowatt, so they're losing a ton of money. But the whole incentive for the government, the Ontario government, to do that is that they're having the private industry put up this clean energy at their own expenses off the hop. So, and they give you this contract for 20 years. So basically, I think it was like $68,000 what we ended up spending on the project, but it pays us $1,000 a month approximately. So it's a great return. I was like, that's good diversity for myself and the portfolio, obviously, because I obviously do a lot of investing in stocks, and it's nice to invest outside. So that solar project's been pretty good for me.
Right. Maybe you should have invested in the solar CSIQ instead.
I know, maybe I should have did that. I was here. I would have just put my money in CSIQ. I would have been a lot better off because the thing's up like 1,000% here in the last year or so. And all these other ones too. Like these things were dead money. Like if you look at that CSIQ, I would never thought that stock can go from, and I'm just going back to the monthlies here. Back in 2008, this was a $51 stock, $51.80, and then kaplooey. And we're in 2012, we're at $2. You know how often a stock goes from 50 to 2 and then back to 32 or 50 again? Not very often. So pretty incredible case here. Usually when they go from $50 to $2, they usually continue the run to zero, but not in this case here. So Canadian Solar and these solar stocks are back.
And I had the chart of First Solar up there. That stock is benefiting from the SCTY news as well. And if you look at this longer term too, I mean, you can.
Yeah.
it almost looks like it just is building a major base here and getting ready to take off. 67.72 was the high on back in October of 2011. So that's still about $3 away from here. But I'd love to get Jim Chenos's take on this. Remember, he was riding this puppy down on the short side here, and I'm not sure if
he was challenging how they reported revenues too, wasn't he? Like saying that they were reporting it before actually doing the projects and stuff. So like the way that they were reporting the revenue, he didn't like how the cash flow was or something. That they were reporting all this money they were making, but they weren't getting the cash for it yet. So I think that was what the challenge was. I'm not sure if those concerns are still there or not, but obviously shareholders here are not that concerned because this one's quietly doubled here in the last month too, month and a half. Yeah, crazy move, these things.
Volatile stocks.
Oh yeah, these things have been hot, hot, hot. Solar is hot. Joel here, we're obviously running a little bit short on time. I just want to talk about Lululemon here quickly, though. It is downgraded today. LULU Stern AG downgrading the stock. Stock is trading down 2.2% here in the pre-market, or $1.50 at 67.5. We've had multiple tops in the $70 area. We got up there again yesterday at 70.16. It just cannot get through there, though.
Yeah, it's been holding here going into the last few 4 or 5 trading sessions, just kind of trying to hold in there, get above that 70 level. Someone has targeted that. Now we are backing off. We are now trading below yesterday's low, which was 67.69. Looking at the pre-market trading here, you had a print lower at 67.14. I think that was an odd lot. So 67.30 here, acting as support. Kind of been channeling here, volatile between 66 and 70. Now it's $1.50 away from that $66 level. The low on Tuesday, 66.21. Then you go back to the beginning of November, you had another low in the lower 66 as well. That was 66.35. I think you got to go back a little bit farther to September. September 13th, you had a low at 65.85. So $1.50 away from it, but 66, you got to respect that as a support level.
Remember, we did have that new overweight rating from JP Morgan yesterday, and Lululemon shares were up about 3% at the close. Bit of contrasting in the sell side here.
Yeah, for sure. You got one analyst coming down and putting pressure on it there. And
absolutely. Guys, real quick, before we do, I know you guys are getting close to our interview, but I do have a question out there. I don't know if we can get to it real quick.
Sure.
We got a trader out there taking a look at Agilent, and I know they report after the close. I'd love to get you guys what your take is on that one. Ticker Alpha, they're reporting after the close today.
Crazy consolidation here ahead of the report. It's actually looking like it's setting up to break out, but like we said, and we'll always say, is technicals take a back seat to fundamental news. So it's so hard to trade something technically when you've got fundamental news coming out after the close. If you're trading it today, it kind of looks like it wants to, it's been, trading in this whole 51.20, topping out here multiple times, like 51.40. Could start to get up above 51.50, probably opens up to 52, and maybe you get a pre-earnings run here, but it's hard to say what's going to happen after the close. Joel still kicking around. What do you think of this one?
51.30 to 51.41 have been your last three highs in this issue, and then, but I know it's kind of weird because you got other highs at 46 and
Mm-hmm.
58. So it looks like someone's taking a piece off here in this area.
Mm-hmm.
Probably ahead of earnings, you're probably going to see the similar kind of trading activity. So use that as resistance. Obviously, if the news takes this above the 51.50. You got a little stopping point at 52, but you could get right back in the 53 handle. If you're trying to protect some profits on the downside, of course, after the close, it's hard to do, but you do have major support at the 50 area. Two lows, one at 50.01, that was 4 trading sessions ago, and 5 trading sessions ago, 49.84. So a little bit of consolidation ahead of the big news. All right, we're going to take just a few minute break here and bring on Serge Berger for an interview. So hold on to your hats. Traders, investors, we have a special guest on today. We have Serge Berger on, who has a MarketFi product, the Steady Trader. Serge, how you doing this morning?
Hey, good morning. Good morning. How are you guys?
Good, good, good. So, Serge, you've got this steady trader, but tell us a little bit about your education, your background there, your market background.
Sure. I actually, my very first job was actually at Bloomberg, where I was an analyst in various equities around the world and things like that, and then really started cutting my teeth in this business on the south side of J.P. Morgan. I did a whole bunch of investment banking activities there, mostly focusing on the fixed income side, which was very interesting. It also really gave me a lot of insight into how the entire financial crisis unfolded, and being involved in the whole CDS trading and selling CDOs and trading them and all that stuff really kind of gave me a different perspective from it, sort of a front row seat, if you will. And a lot of money was lost on the institutional side there from our clients, and that really sort of got me thinking. There's got to be a better way of doing this. And I've been trading equities all the way along for at that point probably 10 years. and eventually decided, start up my own company. Took a few clients with me and started managing their money and doing a lot of advisory business as well for family offices, some high net worth people and retail folks in general. So.
And what do you trade? Do you trade equities, options, futures? What do you like to trade?
Yeah, so I mean, basically, after leaving fixed income, I just I found that the best sort of way for me to make money and from a lot of clients' perspective to what they were looking at was really equities. And equities more in a swing trading point of view from positions sort of ranging from 2 days to multiple weeks.
Okay.
And of course, there'd be options trades in there. But primarily the analysis will be based on individual stocks, and then we'll do the options trade around that analysis as opposed to the other way around.
I think you're in a great time frame there too. I love it that you said you're in 2 days to a few weeks, because I tell this other traders at Bright Trading there all the time. Basically that our traders were always had this scalper mentality where they're coming in, they're trying to make nickels and dimes here, and I'm like, you can't fight the computers here anymore. They've monopolized that space. But what you can do is just lengthen that time horizon a little bit. If you can get out, even to hours or to days, fantastic, because there's not a lot of competition in that time frame space. So I love the fact that you're coming in here and saying, your time frames are 2 days to 2 weeks or whatever, because I think you're in the sweet spot here. Have you found, is that the reason that you've went to this time frame? Is it for some of those reasons as well?
Yeah, that's exactly it. You're hitting it right on. I mean, basically, this is sort of what I saw. So on the sell side, I saw, a lot of people, a lot of the longer term big institutional guys, and even some of them, big money hedge fund guys, their time horizons was really more than a few weeks, on average, particularly the macro guys. So you have a very crowded space that starts at about, probably 2 to 3 months and going out.
Right.
And then you have the day traders and scalpers and all that algo stuff in the middle, HFD, and it's just like it's like driving down up and down I-95 at rush hour. It's horrible.
Yeah.
So you get into that sweet spot where there's a ton of trades setting up and they're not very crowded. So
yeah,
you're absolutely right.
So how do you find the stocks? Like, what are you using? You looking out at technicals or something, or are you waiting for setups? Like, how are you finding your spots and your trades?
Right. Yeah, I mean, basically it's a 3-step process. I do sort of take a step back and I make sure I understand. And this is a daily evaluation process, but it doesn't change a lot. It only changes a couple times a year. But you want to make sure you know where what the general market structure is. And when I'm talking about the structure, I'm talking about what's the general feel. Where's the market getting its read from? We are still in an environment. Yesterday was a perfect example of that. As Yellen started leaking out that speech giving today, everything's based on what the interest rate policy and monetary policy and just generally political environment is. So that changes over time. So that's my base case where I start out from. So right now, I just don't want to be short the market in this kind of environment. That's the first step one. Step two, I start looking for stocks that are doing the right things, that are behaving well technically. So if you look at a stock that's very gappy, like take Crocs for example. Right now, it's probably gonna start gapping up and down a lot because of the news it had yesterday around some corporate events. So you want to find stocks that are then trading well technically. And then thirdly, my trigger point is using candlesticks. So I make sure I get a read on investor psychology on the actual trade setup, and for that I use candlesticks.
Okay, so you look at the entire universe of stocks. You don't have a group of stocks that you follow and you wait for the setups. You kind of scan the entire universe of stocks for your setups.
I have a pretty extensive watch list, and it's all divided up into sectors, right? And then so I look at the probably 9 out of the 10 S&P sectors, where I have, say, about 10 to 15 stocks each, and then on top of that, I have a watch list of just active things that are constantly changing. You got to trade in Facebook and this and that, and so yeah, there's definitely a watch list. It's divided up in different sectors, basically.
Now, do you scale into these positions when you find something with a nice setup? It's meeting your criterion. Do you come in and you buy it all at once, or do you scale in, or how do you go about actually, with your execution?
Yeah. I will say it depends, but on average, I just get in. right?
They
So
just get in. Yeah.
yeah, I basically just get in. It'll depend. Like, there's always situations where you want to scale in if there's a impending news, but you want to start scaling in something like that. But on average, I just get in when I get in. Same thing on the stop outside. There's stops placed, and I get out when I get out, and that's it. There's just no emotions involved.
What's your kind of like risk return that you set? Like, do you have a risk return and ratio that you have in mind here, or how's that?
Yeah,
Stops?
yeah. Usually, like because of the way the mechanics of the swing work, I try to go for gains of about 5 to 8%. So I'm pretty happy with 5 to 8%. You can always keep a trailing stop on and let it rip for 20, 30, 40%. But on average, I like to trade. So I do trades on a weekly basis. I like to just really hit. I'm more trying to hit base runs. Just get for these 5 to 8%. And then stop outside. You try to do something like 3 to 4%, depending on the beta of the stock. Is sort of your stop loss.
And you're obviously trading multiple positions at one time, right? In your portfolio. I know you said the market's been going up here. I mean, do you have any shorts in your portfolio as a hedge, or just technical setups in that, or are you just 100% on the long side now?
Right now, I actually just yesterday took off the hedge we had in the S&P puts. Just and I'm happy to put those back on today if we see weakness. But in general, I try to have positions in both directions. Right now, I think we have a couple shorts left, but it's definitely a two-sided. I definitely trade both sides of the market. I just think if you have a clear direction the market's trending in and you understand the structural environment, you're just better off. You have a much higher probability of trading in the direction of the trend. That's a very simple thing that we all know. It's another thing to actually do that.
And what was your trigger to take off? I mean, we had the weekday on Tuesday, or kind of a mixed day on Tuesday. We had the substantially lower open on Wednesday. Couldn't take out the pre-market low. What was your trigger when we didn't get follow through off the open, off the pre-market low, or was it a little bit later in the day?
Well, first of all, this hedge has been on for about, I think, 30 handles in the S&P. So I think probably somewhere near 1750. And I always set the stop out 1780. So very simply, I stop out. That's the rules. If you can't stick to my rules, I have no reason to do this business. We all know that. But basically, we just had a very clean breakout. Now, can we get a nasty reversal today? Absolutely. But at least I know I stuck to my rules. So.
And I think I agree with, like, I'm always one is rule-based trading, have your game plan before you go in, know your risk-return ratios. I always like the 2-to-1. I feel like a lot of my trades are just like you on that swing trading strategy. I really, I'm feeling, this is really good stuff that you're giving here, because kind of like the 2-to-1 risk-return and the time frame you're in the sweet spot there, Serge, so that's good. What stocks are you looking at right now? What's on your radar?
Right now, I mean, I'm looking at, if I have to look at my 1, 2, 3 step process, I look at stuff that's actually acting relatively strong. So, I mean, if you look at, you can look at the materials, for example. Yesterday had a great move. Look at Monsanto's breaking out, right? So you look at sector and then stock. You can look at, some of the retailers started, some of the home furnishing. Look at RH as Restoration Hardware. Hewlett Packard keeps ripping higher. So tech had a great day yesterday. Then you look at something like Pfizer, PFE broke out 2 days ago. So you have a real mix in sectors, but within that sector, there's quite a good amount of selectivity. Look at the financials, for example. The XLF didn't manage to break to a new yearly high yesterday, but individual stocks like KeyCorp, KEY is this ticker symbol, is around power. So. I'm just looking for relative strength and making sure the sector's okay.
Looking at stocks breaking out to new highs too, I see.
At this point, exactly. Now, of course, that strategy will depend on where we are in the market. Right now, we have no reference points to the upside in the S&P or any other market except maybe the Russell, which is a little bit off the year-to-day highs. But more or less, we have no reference levels on the upside. So you got to trade breakouts, or if you see really good support with high technical patterns, you can trade those as well. That's there for the taking too.
And with the Twitter IPO, there's been a lot of excitement, and I know it's hard to really get any fundamentals off that until they release earnings. But have you been keeping an eye on this stock since the IPO?
You follow the news just to kind of make sure you're not, falling behind the curve too much. But basically, like we were talking about the time frame before, I have very little interest in trading something that has no trading history.
Yeah.
People that trade it again, and keep in mind the time frame. I'm not intraday trading. Well, I do intraday trading, but that's with futures. That's a separate strategy. But for these equities, personally, again, given my time frame, I have zero reference points on the stock. Right? There's nothing, right? So if you remember back Facebook, the thing just plummeted from whatever the opening close on the first day was, at 42, 43, 45, whatever, plummeted down to whatever it went down, and there's no reference levels to focus on. So, to me, it's very important to have reference levels in terms of trading. So I don't trade Twitter. It's going to take me a couple months to make sure there's enough trading history, but I'm definitely following it.
Just one pattern that I've noticed in this issue, and it maybe will be poised to break it today, is it's had 4 lower highs since it started trading, made that 50.09 high, and kind of 4 lower highs, kind of had an update, down day pattern, but looks like it's getting a little strength here. 42, busting above yesterday's high in the pre-market here at 42.87, so trading 42.83. See if it can sneak back into that 43 handle. So what kind of advice do you have for new traders out there, people that are looking to enter the markets?
Yeah, what I always tell my advisory base, whether they're institutionals or any type of trader, and that it's really about being patient. And if you think you're going to come into this business, whether you're a new analyst to Goldman Sachs, or you are just a home gamer, you got to give this time. It's about learning how, first and foremost, learning, get to know yourself, because you don't really know yourself in terms of emotions until you start trading or play some sort of sports, right? And once you can control emotions, then it becomes about patience, and that's you don't run into trades, you don't rush into trades. It's all about waiting for your setups, because if you have a system that works, and a lot of systems work, in fact, I would argue most systems work, as long as you don't rush into the trades and as long as you actually stick to your game plan. I think that's really what I see. A lot of people have good plans, or systems, but they just fail to stick to their actual plans.
And so having the systems and the methodology that you follow helps you take the emotion out of trading. You know where your entries, where your exits are, what your targets are, and so that's how you eliminate the emotion factor in your trading.
Yeah, no, that's exactly it. And as I told you how I started building this particular strategy, one of the great things I found was, the candlesticks. Again, I don't just use candlesticks. That's a bit of a myth as well. You want to start using them in conjunction with other things. But, you can use specific technical analysis tools to really eliminate, for the most part, the emotions, as long as you get yourself to actually set stops. Right? If you can't get yourself to actually set a stop, then you have a problem. You need a third hand to someone actually place that stop for you.
Okay, so pretty much we can get your tone here that you've kind of been riding this bull wave, and perhaps get your outlook for the remainder of the year.
Well, I think at this point, we had such a clean breakout yesterday. I think there's a decent chance that we actually give some of this back at some point over the next couple of weeks. When I do my rounds with institutional investors, though, across the U.S. and in Europe, I can tell you I hear very few people trying to actually reduce positions. So a lot of the guys I talk to, real money guys, they're in this. They're not going to sell stock before the end of the year, which makes me think that we probably have more to go on the upside here at the year end. S&P, maybe 1850, 1860 is a potential upside target. The only problem with that number is that a lot of people are focusing on it. So the maximum frustration would set in, and the market would turn around below there. But I would say moderately bullish into year end.
Okay, Serge, tell us about this product that you have called the Steady Trader, this MarketFi product.
All right, so the Steady Trader is basically a trade alert service where I give away my investment advice that I also do separately for different types of investors. But this is just it's a month subscription based, where They get all my trades in real time, all my analysis. I do a morning video every single morning, 5 to 7 minutes long, where I go through the market, 1, 2, 3, that process I talked about just now. Go through the entire portfolio, do the watch list for the day, and everything like that. So you get real-time trade alerts. I do webinars as well for subscribers, and they have direct access to me by message and by phone all the time. So it's been a lot of fun, and I'm looking forward to continuing it.
Okay, we've had Serge Berger on of the Steady Trader, giving us his outlook on the markets and talk a little bit about his product. Serge, thanks for coming on the show today. It's always good to get different styles and different opinions on the markets, and if possible, we sure like to have you back on again.
Sounds great, guys. Thanks so much. Trade them well.
Okay.
Thanks, Serge.
Thanks, Serge. Okay, we are going to now go live to the news desk here with Mighty Joe Young.
Well, thank you very much, Joel, and thank you to Serge Berger for coming on the show today. That was really great. We love these Market 5 people, don't we? But I don't think you mentioned next week's event, Joel, on November 20th and 21st, where we have 7 Market 5 mavens presenting between the hours.
7?
7, that's right. That's what all these guest spots are for this week and early next week. We have a great Market 5 event coming up. Everyone should check it out. And we should probably post a link in the chat or something like that, huh? All right, well, moving on to today's headlines. 2 Secret Service officers have been pulled from President Obama's security team and are under investigation for misconduct, the Washington Post reports. Ignacio Zamora, Jr., a senior supervisor responsible for 24 agents in Obama's detail, reportedly tried to re-enter a woman's hotel room this May after he realized he left a bullet from his service weapon in the room, according to the Post. The incident only recently came to light publicly. A probe into that incident uncovered sexually suggestive emails Zamora and another supervisor, Timothy Baraclaw, had sent from a government-issued BlackBerry to a female subordinate. Darn those BlackBerries, man. They're getting everyone in trouble. That's why I don't have one, and neither does anyone on the news desk. Fuse, the niche music network, owned by MSG, is looking to fetch at least $300 million in a sale, leading at least one bidder to balk at the price tag, the New York Post has learned. Madison Square Garden executive chairman Jim Dolan is aiming higher after Qatar-based new outfit Al Jazeera paid $500 million for Al Gore's struggling cable channel, Current TV, in January, according to sources. However, the Current TV deal was widely seen as an outlier. The steep price has a way for Al Jazeera to gain a foothold in a foreign market where it had long struggled to gain distribution. A more recent and comparable sale in March was CBS Corporation's $100 million purchase of a 50% stake in the TV Guide network from JP Morgan's One Equity Partners unit. The network is co-owned by Lionsgate. Apple is under investigation in Italy for allegedly hiding 1 billion euros or 1.34 billion US dollars from the local tax authority to judicial sources with direct knowledge of the matter, told Reuters. Milan prosecutors said Apple failed to declare to Italian tax authorities 206 million euros in 2010 and 853 million euros in 2011. One of the sources said, confirming a report by Italian magazine L'Espresso. Checks on the size of the tax are underway, the source said. The Italian subsidiary of Apple books some of its profit through Irish-based subsidiary Apple Sales International, thus lowering its taxable income in Italy, the source said.
Joe, do you think they just kind of misplaced that $1 billion? I mean, this is Apple. Like, do you think that was just kind of like, oops, somebody's wallet?
Well, I mean, to be fair, Jake. To be fair, they have multiple billions, so I imagine that it must be very easy for them to displace 1 or 2 or 5 of them. I mean, don't you think?
Yeah, they got like 150 billion in cash. That's something they could have just left that in their jean pocket and it goes through the wash.
Well, that's exactly what I was going to say. If I had like 100 pennies in my pocket and I was transferring them from one pocket to the next, more likely than not, I would drop a few.
Exactly.
And then we'd have to wonder where the pennies went. Thanks for that, Jake, by the way. I think our listeners understand a little bit better now. 3 workers were reportedly injured after an industrial accident occurred at Tesla's factory in Fremont, California yesterday. The Fremont Fire Department told Benzinga that Public Information Officer Dan Cardenas is currently meeting with Tesla management to discuss the accident, which was initially thought to be a fire. Lenovo Group is the new third wheel in the smartphone market, virtually dominated by the duopoly of Apple and Samsung. The Chinese PC maker, which has been selling smartphones outside of China since 2012, became the world's third largest smartphone maker by shipments in the third quarter, overtaking South Korea's LG, according to data from Gartner released today. Lenovo overtook Hewlett-Packard as the world's biggest PC maker earlier in 2013. Lenovo, which earlier this year also launched its high-end K900 smartphone, saw its shipments jump 84.5% from a year earlier to 12.9 million units in the 3 months ending September 30th, giving it a market share of 5.1%, up from 4.1% a year earlier. In overall mobile phones, Lenovo also moved up in the rankings to number 7. Toronto Mayor Rob Ford has admitted buying illegal drugs in the last 2 years at a meeting at which city councilors asked him to take a leave of absence. In recent weeks, Mr. Ford, who is 44 years of age, has admitted to smoking crack cocaine while in office and to struggling with drinking. In a vote of 41-2, the council in Canada's largest city requested he take leave. Mr. Ford has vowed to stay. I wish Dennis was still on. Maybe he could give us a little bit more insider info on that, considering he is Canadian. The White House is rushing to come up with an unspecified fix as early as this week to counter the millions of health coverage cancellations going to consumers. At the same time, it promises improvements in a federal website so bulky that enrollments total fewer than 27,000 in 36 states combined. I thought that the number was closer to 50,000. Shubs, you have any intel on that? The latest number he heard was fewer than 27,000. We'll take it from him because he actually checks his facts. LinkedIn has fully integrated social newsreader app Pulse into its mobile and web properties. That means that after downloading and opening Pulse for iOS or Android, users will see article recommendations based on the subject categories and people they follow on LinkedIn, and, if they used the app previously, on Pulse as well. Users will be prompted to sync their LinkedIn profiles with their Pulse accounts after downloading. The roaring market for initial public offerings has hit some speed bumps in November, with a number of deals attracting less investor enthusiasm than had been the case for much of the year. IPOs remain on track for their busiest year since the financial crisis, with bankers and investors expecting a steady stream of deals through year-end and into 2014. But some measures show cooling of demand for newly minted stocks. Twitter's $2.1 billion IPO was only one of 13 last week that priced above the listing company's expectations, representing 8% of that week's deals. By contrast, 23% of all U.S. listed IPOs in 2013 through last week priced above projections. Furthermore, investors have been less aggressive in buying shares once they hit the market. Yesterday, Hewlett-Packard and Google cited overheating battery chargers as the reason why Best Buy and Amazon stopped selling the Chromebook 11 notebook. Hewlett-Packard and Google have just issued a joint statement saying that the notebook's charger had been overheating. They said that anyone who has already bought a Chromebook 11 can use another micro USB charger and continue using it. Chromebook 11 notebooks had been unceremoniously pulled from the shelves of Best Buy stores. Sales were also stopped at Amazon. According to The Verge, Best Buy stores were ordered to stop selling the HP Chromebook 11 effective immediately and move existing inventory to a secure location. And now for today's trivia tidbit. On this day in 1959, an article written by Massachusetts Senator John F. Kennedy appears in an issue of TV Guide. In the article, Kennedy examined the influence of television, still a relatively new technology, on American political campaigns. Kennedy mused that television had the power to bring political campaigns and scandals immediately and directly to the public and illuminated the contrast between political personalities. Kennedy's article also addressed the political perils of marrying mass media to politics. Kennedy warned that political campaigns could be taken over by public relations experts who tell the candidate not only how to use TV, but what to say, what to stand for, and what kind of person to be. He cautioned Americans to be vigilant about what they watch and to be aware that, like game shows, political campaigns can be fixed. It is in your power to perceive deception, to shut off gimmickry, to reward honesty, to demand legislation where needed. Without the public's acquiescence, he said, no TV show is worthwhile and no politician can exist. I actually did not know that about JFK, and I bet that article still would apply today if it was published again. That being said, I'm going to hand it over to my news desk buddies over here. Who's picking it up for me? We got Snaky Jake on the line right now.
Sir.
Maybe he has some more color about the billions that Apple's losing, or maybe JFK's musing in the TV guide.
Well, to be quite honest, I mean,
is that the TV celebrity Jake LaCour? Is that who is that we have on here? Jake hit the TV airwaves here in Detroit City yesterday. Jake, what did you talk about?
We were talking about the U.S. Airways American Airlines merger last night. So it was on was it CCTV, the new Chinese television network that's coming to the United States. So it's pretty fun.
I was busy appreciating your tie way too much, Jake. You really know how to put yourself together for television.
Had to go with something that jumped out to leave an impression, right?
You got that right. Did you have fun doing it?
Yeah, it was a blast. Kind of weird. Talking, just basically you're sitting in a room talking into a camera. You can't see who's talking to you, which is kind of weird because obviously I wasn't in studio. Their studios in New York, so it was kind of interesting. You'd have like an earpiece in, and they're just kind of talking into your ear the whole time.
Gotcha.
It's kind of crazy.
No Bill O'Reilly outbursts, right?
Not that I remember, but if you watch the end of the video, maybe I do start running around and screaming. Who knows?
But just so everybody knows, it was live, correct?
Yeah.
Okay,
absolutely.
good. It was live. It was live. He can do it live.
Live.
He's gonna do it live. All right, Jake, take it away.
And Jake being on TV does mean that Joe is next.
Oh
man! All right. Well, somebody better give me some Xanax or something because I have bad nerves when it comes to that.
Just have a drink or two beforehand. You'll be all good. Isn't that what all the anchors do anyways?
Do they give you complimentary drinks before you go on the show?
They offered me coffee. I didn't really want to be wired up for it, though.
And you said, what's in it? And they said,
yeah.
Beans. And
I was thinking Bailey's. Come on.
All right, take it away, Jake.
Alrighty. Well, I'll get you guys some movers out there in the pre-market today and get you guys kind of caught up. Do have a few on the move. One I want to take a look at is actually Sony. A trader tipped me off to this earlier this morning. It's been ticking higher all morning. Closed around 17.95 yesterday. We had a high of 18.39. Seeing the last trade at 18.35. So Sony is on the move. Do have an upgrade this morning on Sony. So that's what looks to be giving it some strength there. We had a few companies reporting earnings this morning as well. Hop into that and get the movers from the earnings reports. We do know that we had Walmart reporting earnings this morning. Whiskey Mike Tango is the ticker there. Pull up the report real quick and get you guys the numbers. Walmart reported EPS of $1.14 versus $1.13. Estimated revenues came in at $115.69 billion versus expected $116.75 billion. Shares are trading down. Looks like traders are really focusing on that revenue figure there. As we dive in a little bit closer, take a look for some guidance here. Looks like the company did report guidance, a range for the fiscal year between 511 and 521. The street was looking for 520, so it's putting the street estimates at the very top of the range. Although that is Walmart is narrowing its guidance to the lower end from what it had already provided. For the fourth quarter, they guided $1.50 to $1.60. Street was looking for $1.69. So you're looking at Walmart with lower guidance, missing on revenue. So it looks like it's disappointing traders. We had a high in the post market yesterday of $79 right after the close. Gaps down following that. Lowest trade I see this morning is $77.25. Last trade at $77.65. So keep an eye on Walmart this morning. That's definitely a solid economic indicator for consumer spending. We also had another retailer, Kohl's, reporting this morning. Kilo Sandy The company reported EPS of 81 cents, missing estimates of 86 cents. Revenues coming in at 4.44 billion, missing revenue estimates of 4.55 billion. Shares are trading down sharply this morning. Looks like we closed a little bit above 58 bucks. Close price looking like 58.34. I'm seeing a low this morning of 52.50, although that looks like a little bit of an algo spike down. Last trade I'm seeing is at 54.20 on fairly thick volume this morning. So keep an eye at the open. Looks like we may have some momentum. It is up off the lows and rallying a bit at this point. So keep an eye on Coles. Joel, what do you think we're going to do at the open with Coles there? Since we're getting a little bit of strength right now, looks like we may have hit the lows. What are you thinking here?
Jake, this is tough. This is tough. You had that pre-market low here, and actually when we were on live in the broadcast, it just kind of talked about a little bit of a rounding bottom in Coles here. You stuck down near the 52.50 level, I believe 52.55, 78, 52.60. That level started to be defended. We got the little consolidation there. There was actually the bloodletting had stopped. Someone was sticking their nose out saying, hey, I'm buying it here. There you go. You found the support there. Now you're bouncing up. Now, Jake, I tell you, it's tough. All the people that did scoop it up in the pre-market here are now going to be, letting out their positions. We've rallied, $1.50 off that level. We just made a pre-market high at 54.30. So really hard to pick a level on the upside. But now on the downside, now that you're $1.50 off that low, buyers are going to step up ahead of that 52.50 level. They'll feel like, oh, I missed the bottom. So I'm looking for support to move up, and resistance is tough to call. I just wanted to alert our traders. I was taking a look at that Sony chart when you were talking about it, and kind of getting into a crazy area here. You've gapped down from the mid 19 level to 18, and now you're regaining it in the pre-market high, and Sony, I believe, is right here. I don't know if I would chase it up here at 1847, 1837, pre-market high 1839. What I would prefer for more reliable setup, if you could get a little whoosh back down to the $18 level. 17.98 was yesterday's high. A little bit lower risk of an entry here, but boy, I tell you, things do look wide open here between 18 and 19.
Definitely be interesting to watch at the open. Another company we had reporting earnings after the close, but this morning was Viacom, Victor India Alpha Bravo. The shares we're looking at there. Company reported EPS of $1.55 versus $1.45 estimates. Revenues came in at $3.65 billion versus $3.6 billion estimated. Now, the report seems to beat estimates on the top and bottom line. Looks like the call is disappointing traders. It ticked high up to 85.78 and has dropped from there. Last trade I'm seeing is at 82 bucks, which is the low for the morning. The stock closed at around 83. Was at 83.20 or so yesterday. Joel, do you have anything on Viacom here? Very thin volume in the pre-market, so it could be just somebody kicking it around, selling off. But kind of interesting when you get a stock that beats on the bottom and top lines, and now it's trading down.
Yeah, not exactly sure what they're saying in that conference call, but investors are definitely turning the other way. Topped out at 85.78 here in the pre-market. Didn't trade a ton of volume there. Looking at the daily chart, that $86 level, I believe that was a level that we gave you. There was really nothing else there. I believe they hit the $86 level. When did it hit that? That was a few trading sessions ago. Got back up 86.06. But hey, that's water under the bridge now. Now we got to find support in this thing. And man, it's going to be difficult. We've just had a 4-point drop. We'll take a look. Pre-market low with 81.50, getting a little bounce off that. So 50-cent bounce off that. I would use that as a minor support point, and then go into the daily trading. Yesterday's low, the thing went crazy, 79.20. That's your next major support level. So look for that 81.50 to hold, or we could be going back to trading in the lower 79s.
Brent just tipped me off to something. Looks like Lockheed Martin's cutting 4,000 jobs. Is that what you said, Brent? Not seeing any trades right now, but I don't know if you have any details on this big announcement there.
Yep, said they were going to be consolidating a couple facilities, which would be affecting 4,000 employees. Yeah, I don't really see the stock moving too much either. Seems like some big news on the jobs front, but as far as Lockheed's stock price, not so much.
Taking a look at Boeing real quick. Interestingly enough, Boeing is on the move in the pre-market. A lot of scattered trades around there, but it is higher from yesterday's close. Not sure what that's implying, but I know there is a major air show going on right now where Boeing is showing off some of its new products. Joel, what do you think on these two? Obviously major military contractors. With Lockheed cutting 4,000 jobs there. Kind of an interesting development. Do you think it's going to drop at the open? Do you think traders are going to like that and say it's cost cutting? What do you think the angle here is?
These defense stocks have had a nice run. Looking at Lockheed Martin here, just kind of finding some resistance here. I mean, I guess cutting jobs, is not a bad thing because it lowers expenses. 138.15. That was a double top. That was your all-time high. We backed off a buck from that, so have to use that as a major resistance level. Coming back on the downside, just kind of hanging out on the close. As long as this thing can stay above that double bottom, 136.01, 136.09, still good to go on the upside. Looking at shares of Boeing, and it's kind of a similar pattern here, developing some resistance here, multiple highs in this 133.5 to 134.58. Now 134.58 being the all-time high here. Kind of looks like a real long consolidation pattern here. I would say if this thing breaks below 131, you had a low at 130.95 and a low at 131.10. So that's your major level. Let the profits run on the upside. You break below 131 here, and you could easily be trading back down under 130, perhaps 129.55.
Alrighty, with that, I think I will hand it over to my confidant on the news desk, Mr. Brent Slava. You ready to give us some update on the ratings this morning?
I'm ready. Yes.
Rock on.
Ratings is where it's at this morning. Let me hit you with the top upgrades, top downgrades, and some of the new coverages this morning. Baird upgrading shares of Solar City from neutral to outperform, raising the price target from $50 to $71. B. Riley & Co. upgraded shares of Finish Line from neutral to buy. Bank of America upgrading shares of Office Depot Oscar Delta Papa from underperform to buy. That was a couple notch upgrade. Rather notable there from Bank of America. Oppenheimer upgrading shares of SunTrust Sandy Tango India from market perform to outperform. And then Morgan Stanley making a pretty big call on shares of Sony this morning, upgrading the stock from equal weight to overweight. Couple of the top downgrades this morning. Deutsche Bank did downgrade shares of Cisco following those results. Deutsche Bank now with a hold rating on shares of Cisco. Also on Cisco, Goldman Sachs did remove the stock from its conviction buy list. However, Goldman maintaining a buy rating on shares of Cisco, lowering the price target to $25. JP Morgan downgraded Penn National Gaming, Papa Echo, November from overweight to neutral. And we talked about on the show a little bit earlier, Stern AG downgrading shares of Lululemon from neutral to underperform, slapping the equivalent of a sell rating on shares of Lulu. Stern AG now has a $56 price target on shares of Lulu. Stock is trading down to around $67.50 at last check. That's down about $1.50. Remember that Lulu shares were up about 3% yesterday. Yes, about 3%. JP Morgan did initiate the stock with an overweight rating. Now you're seeing Stern AG come in with the equivalent of a sell, a bit of sell side dissension there. Credit Suisse on the new coverage front. Credit Suisse initiated coverage on a number of the integrated oil names, starting shares of Total and also starting shares of Royal Dutch Shell with an outperform rating. Credit Suisse also initiating coverage on shares of BP and Statoil with a neutral rating. We have just under 2 minutes left ahead of the open. Hope everyone's got their trades ready. On the economic data front this morning, we will have Bloomberg Consumer Comfort Index at 9:45. Give you a little reading on just what consumers are thinking. Tomorrow, we will be getting an Empire Manufacturing Import Price Index at 8:30 a.m. sharp. That's Eastern Time. We will also get industrial production and capacity utilization at 9:15, and then at 10, rounding out the economic data for the week, we will get wholesale inventories for the month of September. Earnings after the close today, we will get Applied Materials and another retailer, Nordstrom, hitting on that department store earnings action. I think that's about it, Joel.
Back here on the Benzinga news desk here, getting ready for the open here, less than a minute away. We'll cover the early action in the S&Ps. Now we're $5 off the high. We hit 17.85 and a quarter, that being the all-time high. So that'll be a level to keep an eye on if we do go into rally mode. But here we're hanging out. We're hanging out a buck off the low. You had a 17.79 pre-market low. You had the all-time high close of 17.78.75. So if we're just going to have another one of those straight up days here, we should hold this 17.78.75, the close level, and migrate back up into the 17.80s.
Ding, 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 ding. Do I do a good opening bell, Joel?
Yeah, Brent, my comrade here on the news desk, the way you handled that Tesla fire interview yesterday, that was excellent, man. You got right
you,
to
sir.
the bottom of it.
Thanks, man. Appreciate that.
Okay, SPOOs go down and kiss the close, 17.78.75. That's your reference point, highest all-time close in the S&Ps. So be keeping an eye on that, see if buyers can hold it there at that level. Let's move on to, you got to talk about Twitter. Twitter, interesting pattern here I've noticed since the IPO day. You can't really call it an up day or a down day because, it started out at 26, but it had a down day, an up day, down day, up day, and so it will today be a down day. I've also noticed in this stock that every day since the IPO, it has made a lower high. Now, yesterday's high was 42.87. We are trading at the high there at 42.49. So we'll see if we can break that pattern of lower highs since the IPO day. Keeping an eye on 42.87, yesterday's high. Staying in the social media space, let's talk about Facebook here. Had a nice rally off a double bottom it made in the mid 46s. Rallied up yesterday, got to 48.74 yesterday, and boom, we ticked 48.75 only by a penny. Made a high. Had a 48.65 high on November 8th, so you do have some resistance here building in Facebook. Moving over to another stock, we were talking about a potential breakout. Doesn't look like it's coming to fruition as of yet. JCPenney got a nice boost at the pre-market. Someone made a print, I believe as high as 883. We were hoping to see if it could get a move over the major resistance here at the 877 to 880 level. Dennis noticed there was quite a bit of stock here in the book at that level. So it was not, it was perhaps satisfied on the open, 876, 880. Actually, that spike in the pre-market here in JCPenney, I'm not sure what caused that, but you did get a spike to 894. So we'll see if JCPenney can hold in here in this 870 level, despite the S&Ps leaning a little bit on the close here. Shares of Tesla, you got to be looking out for the multiple lows it had between 136 and 137. I believe over the last few trading sessions, you've had 3 lows between 136 and 137. Taking a look at it from the daily perspective, you did on let's see, Monday, Tuesday, and Wednesday, all three lows were between 136.18 and 137.10. We are creeping down into the 137 handle. Got a little bit of a bounce, so we'll see if that support can continue to move up in shares of Tesla. Moving on here, let's can't do a show without mentioning Apple. Apple Computer, wicked consolidation in this thing. 11 for 10, 11 days is traded in a very, very tight range. Kind of getting a little boost here to the upside. We are approaching the high that we had on Tuesday at 23.92. That's kind of been the top of the consolidation period. So about another 50 cents here from a potential resistance point in shares of Apple. And the big loser today. The big loser today is Cisco Kid. Bad earnings, traded down all through the pre-market here. Been trying to put a bottom in here at the $21 level, but hit 20.88 and really no bounce yet. 21 is the high, so I guess you got to be leaning short here until it clears that $21 level. Looking for Cisco longer term support. I believe there were some lows in the lower 20s here. You have to go way back on the weeklies to find that. Had multiple lows at weekly lows in April and in all through month of April at the $20 level. So perhaps a potential entry point here on the long side or to cover short if it continues this carom down here to the $20 level.
Joe, we didn't really talk commodities this morning. Crude is relatively quiet, down, I don't know, 0.5% or so, 93.30 last trade there in crude, but gold is moving rather sharply higher this morning. I see it up about 15 bucks to 1284.30 per ounce at last check. Gold was pretty volatile this morning ahead of the open. Crude once again pretty quiet, kind of trended lower. I don't know if you want to take a couple of technical levels in gold, Joel, please, sir.
Let's take a look at the gold market here. Didn't even notice that it was trading up $16 here. Let's take a look at the dailies here in gold and see if we can find some potential resistance here. You are looking, I believe you had a high at 1288 and change. Let me get a look here. 1288.20, I believe. 88.80. That was your high that you had on Monday. We have gotten to 88.20 here in early trading, so we'll keep an eye on that resistance, 88.20 to 88.80. If in fact you can bust above that, might work your way back to the $1,300 level. SPOOs hold the close. Shocker, they hold the close at 1778.75. Rallying smartly here up to 1782. That's mid-range, 1782 and a quarter. So that is a minor, and I say minor, resistance point. JC Penney recovers back up to the high, back to 880 here, trading at 879. So that's getting a little momo going to the upside. Tesla quickly rebounded off the 138 area. Couldn't quite get to that support. We were looking that major support between 136 and 137. So bidders moving up. Resistance is now going to be support in Facebook. We've broken above the 48.75 level. Twitter did sprint above 43 or 43, excuse me, but back under the $43 level. So that string of lower highs has been broken in shares of Tesla. I just want to go back and take a look at the crude. It's been kind of quiet lately, Brent. You did mention here that it was trading down, but this $93 level has really been good support. You had a former low of the move in Tesla in crude oil at 93.07, I believe, and you came down a few days after that, took out that low. You did have a 93.07 low on November 5th. You snuck under it on Wednesday. You went to 92.93 and had a nice rally off that. Now the 93.01 level is coming into play. So still have to respect the $93 level as support in crude futures. IBM getting hit a little bit on the Cisco news. IBM sprinted off the low 170 level. We'll see if it can continue to fight back and get some of these losses. Kind of a wild range here, opened at 148 and traded a buck above it and a buck below it. Oracle also taking a hit here on the Cisco's driving everybody down, but the S&Ps are going higher, so go figure that out. Oracle, after hitting, I believe, a multi-year high yesterday at 35, is now down 74 cents on the session, 34.17 low. If you're looking for support in Oracle, you're going to have to go back to the 33.76 to 94 level. That was back earlier in the month. So still another 30 cents to go to get to support.
Joel, what'd you do? You must have done something. The market's rallying right here.
Market always goes up. What's new? We bounced off support, Brent. The close 1778.75. You had a pre-market low at 79. The close, the all-time high close, 78.75. So you came down to that level, and you've gotten a bounce. The short-term bounce here is finding resistance here at mid-range at 82 and a quarter. So in order to continue that another leg up here, we need to clear this 82 and a quarter level.
Yep, it looks like that's not going to happen right now. Kind of selling off after hitting that right now.
Just a little. Blink your eye, we'll be right back up.
Yep, yeah, that's actually exactly what happened.
Lululemon, kind of been in the news quite a bit here. Taking a hit in today's trading. Kind of got a start in the pre-market on the downside. Now you're getting some follow through. If you're looking for support here in shares of Lululemon, you will have to go, I believe, to the $66 level. Big level for Lulu. Hit 66. What was the low from 3 days ago? 66.21. You had a low. And then you also had a low near that $66 level. You had a 66.35 level. So 66 coming up on Lululemon here. S&P's back off 2 points off the mid-range number, the intraday high 1782 and a quarter. Apple trying to continue here with a breakout to the upside here after 11 days of consolidation. So we'll see what takes place here. Doesn't look like you're going to get follow through. That J.C. Penney still running into sellers are just not going away here in the higher 870s and 881 handle. What else did we talk about on the show today?
I'm seeing a early morning upgrade on Cisco from Standpoint Research. Ronnie Moss sticking his neck out here, upgrading the stock with shares down. He's saying buy the dip.
Well, it got back over 21 here, perhaps when that upgrade came out, but hasn't gotten very far. You just may see this stock just churn around this $21 level for a long time. Made a low at 20.77 here, now back above 21. So if you're going to use the old 15-minute low as a parameter here, as the low being in Cisco here, you're risking a quarter that can get back and recoup some of those losses from the pre-market. If there's any other issues of interest out there in the OptionsHouse chat room you'd like us to take a look at, we'd be more than glad to throw them up on a chart and put our 2 cents in here.
Hey, I did just want to highlight real quick. today is the last day that hedge funds are going to need to file their 13Fs, November 14th. So you're going to see a number of 13F filings coming out. Just a heads up, we have seen a couple of reports come in already. Barry Rosenstein's JANA did issue the 13F. You're going to see 13Fs from David Einhorn, from Dan Loeb, from Buffett. The good old whale watching season, as the pundits love to say.
Right, and we'll see if they are, pairing positions or adding the positions. You usually get a pretty good reaction. So keep an eye on your Benzinga news feed for that information as it comes out.
Yeah, I think the whale watching trend has sort of tapered over the last couple of years. I feel like they used to be sort of a little bit more impactful. I'm not seeing quite the same reactions following these 13F disclosures as I was, I don't know, 3 or 4 years ago. But nonetheless, still nice to know what the whales are doing.
Okay. All right. As we close out the broadcast here, the S&Ps are just hovering around unchanged here, so we'll see if it can maintain its footing here above the close. We did get up that 82 and a quarter, does mark the mid-range, or was the mid-range on the session, so we'll see if sellers have the appetite here to bring their offers down. That's our broadcast for today. Thanks for your participation, and we'll be back with you tomorrow.